we entering the banana zone? That is the question that we're going to be trying to answer today. And this was brought up by Raoul Paul, co-founder and CEO of Real Vision Group. If you don't know who Raoul Paul is, he is an entrepreneur, investment strategist, asset manager of digital assets, content creator, and financial advisor. I highly encourage you to look him up on Google and watch some of his videos. He has excellent work and has some great thoughts on Bitcoin, Ethereum, and the crypto universe in general. So what is the banana zone? And Raoul Paul explains this in his The Banana Zone Explained article on LinkedIn. And he says the macro summer and fall are driven by the global liquidity cycle that has exhibited clear cyclicality since 2008. And why? Well, back then the worlds all reset their interest payments to zero and their debt maturity to 3 to 4 years, creating a perfect macro cycle. And you can see this in this chart, which is the maturity distribution of marketable interest-bearing public debt in percent, where 37% is in 1 year or less and 35% is in 1 to 5 years. So taking a look at this chart, you can see this 3 to 4 year cyclicality pretty clear. You can see we bottomed out in 2008, rose, bottomed out in 2012, rose, bottomed out in April of 2016, rose to about 60, 65, bottomed out in 2019. We actually dipped a little bit lower, and that was probably because of COVID. Peaked up at 65 as we brought the economy back online, and now we're at the lows again in 2023. So if the cycle is to continue, we'd expect to peak to about 60 to 65 when it comes to the ISM data in this business cycle. Raoul Paul goes on to state that this forms part of the everything code, and we'll go over what the everything code is in a second. But this is where the business cycle near perfectly repeats as liquidity rises to debase the currency to service the debt rollovers. Without it, yields lose all anchor in a debt spiral, which is to be avoided at all costs. So we'll look at what the everything code is, and it's a culmination of Raoul's 30 years of expertise and research in macro, crypto, and exponential age technologies. He calls it the secret code everybody should learn, and really it's a cyclicality code. So going back to the article, he states the effect of that debasement is to lower the denominator, fiat currency, and that makes asset prices optically rise in value. So here is the NASDAQ, and you have the total liquidity index overlaid on the NASDAQ chart. And you can see as liquidity rises, so does the NASDAQ. If we look at Bitcoin, we have the same overlay with the total liquidity index over the Bitcoin chart. And as you can see, as liquidity rises, so does Bitcoin. Growth assets, tech and crypto, do best as they are in secular trends based around adoption. And he puts in parentheses Metcalfe's law. So what is Metcalfe's law? It states that the value of a network is proportional to the square of the number of connected users or devices in the network. In simpler terms, the more people or devices that are connected to a network, the more valuable that network becomes. And this was initially applied to the internet, social media sites, telephone networks, but more specifically, things like Facebook and Twitter. And it's basically an exponential law of adoption when it comes to these type of social constructs, of which Bitcoin is a social construct. So looking down here, this is twice the speed of adoption of the internet, comparing active wallets versus IP addresses, which are not perfect but are comparable measures. And you can see on this chart of crypto adoption versus internet adoption, and during the same time frame, we're looking at literally twice the amount of adoption compared to the internet during the same time frame. Internet came out to about 500 million, where according to this chart, we're going to reach 1.1 billion users by 2025. So he believes that this will bring the adoption curve for the crypto market cap from 2.5 trillion to $100 trillion over time, which is pretty incredible. Now, going back to the banana zone, in macro, summer, and fall, tech does really well. and has its own mini banana zone, with fall being the most pronounced. And he tries to illustrate this with this chart of the NASDAQ overlaid with the seasons. But because crypto has outperformed tech, the supermassive black hole as he calls it, the banana zone is much more pronounced in crypto. And that's something that I would absolutely agree with. Now, the transition to macro summer is relatively forecastable due to the repeating cycle. And again, he points to his everything code. And that makes perfect sense to me. Again, we have the ISM chart overlaid with the ISM 22-month lead, and they do match each other. And this ushers in liquidity growth. Again, we have another chart of the ISM 15-month lead inverted with the GMI total liquidity index year over year. And they do match each other. So this has a tendency to create what he calls the banana zone. Here we have the Bitcoin chart for the last 3 cycles, and to the right we have the current cycle for 2024, and as you can see, they perfectly match each other. They all have what could be looked at as a cup and handle at the bottom of the chart, followed by a parabolic uprise. So we shouldn't expect this time to be any different. In fact, the 4 most dangerous words in trading or investing is "it's different this time." And he pretty much ends the article stating the same, in which he says the odds of this changing significantly are low due to the current debt rollover, the election, and global issues such as China. However, he also states that nothing plays out perfectly, and we can't tell the structure or nature of the final leg of this cycle, whether it's going to be a blow off top or a stunted cycle like the previous Bitcoin cycle. But it is important to look at the current cycles or the past cycles to project what's going to happen in the future. And I think he does this really well. So I do think we are entering the banana zone, and we'll take a look at the chart just to see how that might play out. Taking a look at the Bitcoin chart, I have the daily up along with the previous cycle and the current cycle price action. And when I first heard about the banana zone and I started placing my lines, it occurred to me that we potentially had already entered the banana zone. Now, if we take a look at the previous cycle, we're going to take a look at these colored boxes. And the reason why I placed these boxes where they were was because the price action for the current cycle looks very similar. So taking a look at this, we had a Bart Simpson-like pattern where we had a rise, choppy action, and then a drop. We had a period of uprise and a little bit of consolidation. We had basically a pre-blow-off top consolidation, and then we had our distribution pattern here in this blue square. Now, if we look at our current cycle, we had a Bart Simpson cycle or pattern, followed by a period of uptrend and small consolidation, a larger blow off top and consolidation pattern, a parabolic uprise, and now we're in an area that could be construed as distribution in this blue square. So that's something that is very concerning to me, as well as I have a parabolic line that coincides with the current bull run. And you'll see that it really does match fairly well. The differences being is that we have the halving back in May of 2020, where we didn't have a pre-parabolic rise. So as you can see here in 2020, we had the halving and we had a consolidation period where we started to have these matching patterns. The other thing is that it took about 338 days from the halving to the peak in price action. And it's widely observed that the first peak was the correct peak when it came to the parabolic uprise. The second peak was basically what they would like to call a stunting of the cycle. So theoretically, if we had continued with this parabolic uprise, this portion of the chart should have been higher. Now, whether you agree with that or not, it's left to be debated. But if we come to this side of the chart with the current cycle, it we could have the same pattern occur. Now, the one thing that I will say is I'll get rid of all the lines is the distribution pattern is different. So with this distribution pattern, it was a choppy movement to the upside. And you can see that this was really a rising wedge. We had a rising wedge where we broke through it, retested it, and came down to the bottom. Now, when we come to the current price action, it's very different. It is not a rising wedge. It is actually it could be construed as a falling wedge, or it could be a parallel channel. We'll highlight that. And those usually break to the upside. So the difference here is that we may have a second parabolic rise, which would be in confluence with Raoul Paul's banana zone move. So taking a look at the time frame, you can see for 2020 post halving, it took 338 days to reach our first peak, which was in confluence with our pi cycle pattern. If we translate this to our current cycle, that would bring us to the 22nd of March 2025 if we were using the halving point as our starting point. Now, if some of you believe that this was a left translated cycle and it started with the ETF, that would bring 338 days to December 13th of 2024. And that would be in line with Raoul Paul's banana zone theory. So those are some things to consider if this cycle is similar to the previous cycle. Now, the one thing that is interesting about the previous cycle is some say that it was a stunted cycle and that we should have gone higher. And that's why we had this blow off top or distribution, consolidation at a lower price. And then we had that second peak, which ended with the Fed and interest rates. And then we had the collapse of all the exchanges that were basically using our money to make it look like they were making more money than they were. So that is something to consider. And I think that this rising wedge pattern, distribution pattern, is very different from the pattern that we have right now. And so I think that going into summer and into the fall, we're going to get potentially our peak price. That's not something I'm predicting. I'm just basing this off of Raoul Paul's banana zone theory. So where would that bring the price? I would think, and this is just basing it off of the chart patterns that I have here right now. And I consider this a flag pattern. And if this is a flag pattern and we have the summer and the fall for price action, that would bring our potential price for Bitcoin to be at the $94,000 mark. Now, this is not a perfect science. I'm just basing this off of the patterns that we have right now. And I think that's a reasonable price to look at. Depending on where you place this, I probably didn't place it correctly. I would say anywhere between 94 to 106,000 should be our expected price action. And that's I would say conservative price action for this cycle. So there you have it. That's my thoughts on the banana zone and potential price action on how it plays out. If you have any questions or like me to look at anything else, please let me know. And I hope you have a great day. Thanks. Bye.